I got to start with this cascade lower in the tech sector. Is there anything beyond simply just an unwind of a very crowded trade that's taking place there?
Yeah, I mean, look, you go company by company, and obviously something like Facebook. They've sort of missed guidance, and the stock is down probably 30% as a result. And there's a real a lot of deep thinking going on among both growth investors and sort of value investors. Facebook, you adjust for cash, probably trading close to a market multiple today for one of the greatest businesses in history, I would argue. I think it's pretty interesting. I've been nibbling at it here. But look, the tech sector has been leading the market for 10 years in a row. Not surprising to see a bit of a pullback. And by the way, this is good news. If you are an investor, this is great news. It's only speculators who are unhappy about some pullbacks in stocks.
Right, and we've been hearing some of these earnings calls, and these companies are talking a lot more about margin pressures right now. And some would say when it comes to the tech sector, tech margins are still quite resilient, and that's going to keep the overall market stable. Do you agree, or is tech more cyclical than what the market thinks?
Yeah. Well, I guess I would say, look at Google and Facebook, two of my favorite tech names. Both have astronomically high margins, but that's because if you think about what is the nature of their business, they're not manufacturing and shipping anything. They don't have any inventories, et cetera. It's almost inherent. They're almost unique business models that have never existed before in the history of business, where companies can scale globally, reach, in the case of Facebook, 2.2 billion human beings on the face of the earth every month, and can scale at virtually no incremental cost. My bet is that Facebook's margins are going to be super high indefinitely. It's inherent in their business model. Although they're probably they've given guidance for those margins to come down some as they invest in the business, and I think that's probably true. But coming down from a 45% operating margin to a 35% operating margin is still extraordinary.
Whitney, what do you think about Netflix? The company's coming out with earnings these next 24 hours or so. There's, at some point, what's your take on the company itself? And at some point, do you think the company will get snapped up by the bigger ones?
Yeah, well, it's got, what, $150+ billion market cap. There are very few companies that have the appetite to and the scale to acquire something that big. I remember the day it bottomed 6.5 years ago. I pitched it at a conference and on national television. It was at a $3 billion market cap then. My greatest regret of my investing career is as the story was playing out, the stock went up 5x in the first year, and I sold it, and I left a 10-bagger on the table. One of the big lessons I teach my students in my seminars is if you get one of those stocks where the story is playing out beautifully, don't get spooked out just because it's doubled or gone up some. If the story is playing out, trim to manage position size, but you got to let your winners run. That is the key to successful long-term investing.
And Whitney, you're like many of the guests that we interviewed in the last couple of days, saying that this correction that we've seen, or this pullback, has been pretty healthy for markets. And you're saying this is good whether you're a speculator or an investor at the moment. So are you seeing more long opportunities or short opportunities in the market?
Well, it's interesting. I'm seeing plenty of both. 10 years into a bull market, there are a lot of short opportunities. And in fact, twice a year, I host a conference, the only conference of its type, exclusively short sellers pitching short ideas. We do that in New York. Next one's on December 3rd. But honestly, I think shorting is a super tough, difficult business. The vast majority of people should just stick to finding good companies and looking to buy the stocks on pullbacks. That's why I'm saying if you're an investor, you should welcome lower prices to invest and look to invest in good companies. If you're a speculator, the reason it's good news is because hopefully, people who've been speculating the last 10 years have been well rewarded. In fact, the more reckless you've been, the more money you've made in the last 10 years. But that is not the way things play out normally over a long period of time. And so I've met so many young people who've been bull market geniuses the past 10 years, buying stocks today, hoping to flip it to somebody tomorrow without really understanding, calculating intrinsic value, understanding companies. So I was a late 90s bull market genius 20 years ago at the start of my career. I was a speculator, and what caused me to stop becoming a speculator was losing money. So that's why I'm telling folks who've been speculating, you've probably gotten your head handed to you, at least in the past few weeks, if not months. Learn from that and become a real investor and stop speculating.
The job of speculators, since you're mentioning a time frame of about 10 years, I would imagine that job hasn't been easy because the cost of money has basically been at zero. Now that the Fed's normalizing and maybe we get other central banks start to normalize as well, what happens to global multiples? Help me understand what the 3-5-year horizon looks like for global equities. Do those multiples start just rationalizing down, if you will?
Yeah, look, I'll be upfront that I am not a global macro prognosticator. I'm a bottoms-up stock picker, and when I see turmoil at the macro level, what I'm trying to do is find a handful of companies, maybe only a few a year, that I could do a deep dive, really understand them, and look to upgrade the quality of my portfolio. One of the mistakes I made as a value investor over the past 20 years is I looked for statistically cheap stocks, trading at a low current multiple of earnings or cash flow or book value. And I missed some of the great growth stocks of all time because I was too focused on current valuation as opposed to future prospects. So I'm going to punt a little bit on your question about sort of global macro. I don't consider myself an expert. I don't have a super strong opinion other than, generally speaking, the U.S. economy is going gangbusters. I think Trump's going to eventually cut some sort of deal with China on the trade war. So, over a 3 to 5 year period, I don't see, any kind of massive 2008 kind of bubble bursting. And that's why I think it's good news if you're an investor. Go find some high-quality businesses where the business is going to perform real well in the next 3 to 5 years, and very likely the stock will follow.
Whitney, speaking of, I got to ask you about weed, marijuana stocks. I mean, the news obviously this week is in Canada. That group of stocks has just gone up exponentially because maybe of this and other things. What do you think about valuations there?
Yeah, well, the valuations are obviously completely insane. At its peak at 300 for a few minutes, Tilray was trading north of 1,000 times revenues, had a $30 billion market cap. Now, it's pulled back, and a lot of speculators are thinking, time to bottom fish because it's down 50% or something. It's still trading at 500 times revenues. The cannabis industry, the legalization of marijuana is absolutely a big long-term trend. This is going to be a big industry. The thing is, though, investors are falling for the story, and there are only a handful of publicly traded stocks, so they're all crowding in all the speculators and people who just fall for every good story that comes along. They're piling into a handful of stocks, bidding them up to truly absurd valuations, and they're going to get hammered. Those stocks are going to go down 80-90% with certainty.
And we only have about 30 seconds left, Whitney, but since you're in this part of the world, what sort of opportunities are you seeing in Asia in particular? And is there value in markets like China, for example?
Yeah, I told my audience I was speaking to 500 people on Sunday, speaking to 100 plus. That was in Shanghai, 100 plus people in Singapore and in Hong Kong in 2 days. And my message to the young investors here that I'm speaking to is I envy you. You are lucky. You are in the center of the most dynamic, high growth part of the world. And I don't think that's going to change. And again, I'm telling them the fact that stocks are down is great news for them because, one, it'll rid them of their speculative urges that will blow them up eventually. And if they can make that pivot and become real investors, they're in a great area of the world. And if they can poke around the nooks and crannies and find a handful of good stocks, those stocks today are down 30, 40, 50% from where they were earlier this year. That's great news if you're looking to buy.